Hey Bowtie Nation, Joseph Hogue here with a penny stocks video that is going to be hard to beat. 7 of the penny stocks I highlighted in September, just 4 months ago, and in which I invested $137,000, are now up an average 116% in my portfolio, with Big Bear up 190% and Soundhound nearly 5 times your money. Now I'll admit the market has helped, with the Nasdaq up 17% in that time and growth stocks up even more, so penny stock profits have been about as easy as teaching a rock to roll downhill, but the bull market is just getting started, and I'm adding 7 more penny stocks to the list. I'll outline why stocks of small companies should have another great year in 2025, and reveal those 7 I'm adding to the list. Stick around though, because I'll show you also my strategy for finding penny stocks to buy, both that short-term and long-term factors, and it is a totally different strategy depending on how long you're going to hold the stock, so make sure you watch for that. First on our list of penny stocks for 2025, GigaCloud Technologies, ticker GCT, at an $876 million market cap. And remember here folks, it's not for that share price that we're looking at, but the market cap when we talk about penny stocks. Share price really means nothing, it's just the market cap divided by the number of shares the company has issued. What's important here is finding those small, fast-growing companies under $1 billion market size that can jump higher. GigaCloud is a business-to-business marketplace reinventing the supply chain for wholesale market. Think of it like an Amazon for the wholesale large parcel merchandise market. Marketplace volume grew 80% over the last year to $1.2 billion, with active sellers up 41% and active buyers up 85% to 8,500. The company's competitive advantage here is in its end-to-end data that it's collecting and the use of AI to drive system efficiencies. I'm going to walk you through this analysis later, show you how to find this and what it means. But GCT booked 43% sales growth to 2023 and 57% growth over the last 12 months. That's very high revenue growth and an increasing trend. Beyond that, the operating margin, that key measure of profitability, was 13% over the last year, so we got a penny stock growing revenue by 50% plus and already profitable. Next here, shares of Red Violet, ticker RDVT, are up 45% since covering it on the channel last year, but still a penny stock company under $500 million market cap. Red Violet provides a cloud platform for identity verification, fraud detection, and prevention. With our lives' increasingly digital footprint, Red Violet estimates the enterprise market for identity verification as large as $19 billion by 2026. That is just its addressable market, and for a company that booked just $60 million last year, the company booked 13% revenue growth last year, down from the 38% compound annual growth over the last 5. But what impressed me here is the company's ever-increasing profitability. Red Violet has grown its EBITDA margin to 27% from losses just 5 years ago, a level of improvement that's hard to come by while growing revenue so quickly. So in that rule of 40 that we'll talk about later, that 13% revenue growth plus the 27% EBITDA margin puts the stock just over 40. But in an industry like cybersecurity and identity management, I think revenue growth picks up from here and surprises investors on its earnings as that profitability continues to improve. Now, we're just getting started on our penny stock list, but 2025 might not be as easy returns as we saw last year. Stocks are undeniably expensive, and you need to understand not just the fundamentals behind each stock, but that overall market environment as well. And above all, be picky. Case in point here, I wanted to highlight GuardForce AI, one of the stocks in our previous videos, until shares jumped 98% in the last 2 days and blew out my short-term price target. But that market environment is still supportive of penny stocks. Using this triangle model by Quinn and Turner that I shared in our 2025 market outlook video, we see all 3 sides here, factors that contribute to a bull market stock bubble. You've still got strong speculation, so that investor sentiment that stocks will continue to go up. Marketability, that ease at which people can buy and sell an investment, is increasing with the move to half-penny quotes last September and the potential for deregulation over the next year. And most importantly, that money and credit is still very supportive, with the Fed lowering its interest rates and investors flush with cash. Homeowners have nearly $32 trillion in home equity, while another $6.8 trillion is stashed away in money market accounts, a record amount that is primed to flow back into stocks. So here, while we might get short dips of 5 or even a 10% correction because stocks have run so far, that bigger picture environment is still very supportive of the bull market and penny stocks for the next year or more. Next on our penny stock list, $160 million Paysign Inc., ticker PAYS, a prepaid card and payment processing service for customer incentives, employee rewards, and rebates within the healthcare, hospitality, and retail industries. The company provides an end-to-end customized solution for enterprise clients, an addressable market it estimates as large as $728 billion in the U.S. alone. Revenue growth has accelerated over the past year to a 30% pace, with some pharmacy patient affordability programs really taking off. But even that at $50 million in sales is a fraction of the potential in that $700 billion market. Sales are expected just 13% higher after 23% growth this year, but this one is another one that's already profitable on that net income basis, so less risky than we see in a lot of other penny stocks. 177 million QuickLogic Corporation, ticker QUIK, has been on the uptrend lately with a boost to expected growth. This company lives at the heart of the semiconductor world in Silicon Valley, offering embedded FPGA and IP software. Quick was awarded a $6.9 million base contract from the DoD in 2022, and its revenue took off from there, with the potential to scale up that contract to $72 million over the 4 years. It's also inked a collaboration with YorChip to develop chiplets and is expanding into related markets. That kind of product expansion helped it grow revenue by 31% last year to $21 million, and it's forecasted to continue that growth to upwards of $26 million over the next 2 years. Next up on our penny stock list, Mind Technology, ticker MIND, is extremely small at just $58 million market cap, but with solid momentum in its fundamentals. The company is a leader in marine technology, the liquid kind of marine, not the jarhead kind, with industry tailwinds in energy exploration and offshore wind, helping to grow its revenue year over year. The company has grown its sales at a 26% two-year pace, with growth increasing in the recent quarters and a 14% margin for that admission into the Rule of 40 club. A record year for revenue backlog, $38 million in backordered business, should keep the revenue growing steadily. We've still got 2 more penny stocks to highlight, including one that is up more than 600% since recommending it. But you know, folks, I'm not about to just drop a list of stocks in your lap and say, go buy these. I want to show you how to find these, what to look for, and nation, nowhere is that more important than in your penny stocks. And it's because there is a big difference in what you look for if you're investing just for a short-term profit versus if you're a longer-term buy and hold investor. First, in those short-term penny stocks, so if you're holding your stocks for less than a year, just looking for that quick bounce, then it's all about investor sentiment and the market environment. Of course, news and fundamentals for a stock are going to be important as well, but it's really that rising tide that's lifting all boats here. It's only that charging bull market that is going to push penny stocks up 50 and 100% in any given year. So here, you're looking first at that environment, those 3 sides of the bubble triangle that we looked at earlier. Beyond that, you're focused on past and forecasted growth for these stocks. Now, over time, profitability and cash flow becomes more important, but in those shorter periods, and especially during a bull market, investors tend to overlook the other fundamentals and just bid up penny stocks exclusively on the ones with the fastest revenue growth. So here you're going to be looking at the income statement first and finding the revenue growth over the last few years. For example, we can see here GigaCloud booked 43% sales growth in 2022, and then 57% over the last 12 months. So very high revenue growth and an increasing trend, which is even better. Then you can go to the analysis tab or wherever you find your forecasts on a broker platform, and we see revenue is expected up 64% for the full year, which is outstanding. It's forecast to grow just 13% next year, so we'd want to check that out, but I tend to give more weight to actual and current year numbers rather than these longer term forecasts. So if you're short-term investing in penny stocks, it can be as easy as that, as long as the overall market environment is right to push stocks higher and you have a company growing revenue at 20% plus a year. I hate saying this as a professional analyst, but it can be really that simple. But then looking for the penny stocks that will do more than that quick 50 or 100% return, the ones you can buy and hold for years, make that 5 or 10 times your money, takes a little bit deeper research. This is where you need to look at the company's fundamentals, the profitability, and that durable competitive advantage that are going to help it grow long term. And one of the key measures I look for, one I'm using in this video, and one of my favorite tools when working as a venture capital analyst, is that Rule of 40. And this is more often used in analyzing software companies, but can be applied anytime you're looking for that growth or penny stocks to buy. The idea here is that you want revenue growth plus profitability, so not just runaway sales, but also accounting for that profitability that's going to help the company survive, even outside the bull market. With our GigaCloud example, we're here in the income statement that shows revenue all the way down to income, and I like to use multi-year revenue growth to see a more durable trend as opposed to just 1 year. So if we take that trailing revenue of $1.1 billion and then divide by $490 million 2 years ago, then get an annualized number, we see GigaCloud has posted 50% annual revenue growth. Then for this profitability measure, I like using the operating margin, which is just the operating income divided by that total revenue. Now there are other ways to measure profitability for the Rule of 40, but this one is easy and straightforward. So if we divide that $144 million in operating income by the $1.109 billion in sales, we get a 13% operating margin, that core measure of profitability. Now the rule of 40 just says that any stock able to post a combined 40% on both of those, so revenue growth plus profitability, is one to buy. GigaCloud obviously beats that easily with its 50% revenue growth and 13% margin, but we've seen other stocks on the list that had different combinations of revenue plus profitability. For that long-term investment, I wouldn't just jump in on any stock beating the rule of 40. From there, you also want to start your research for that durable competitive advantage that the company has over its peers and into the cash flow statement to make sure it's got that survivability. For GigaCloud, we see that increasing cash generated by operations, which is key here, as well as positive free cash flow. That FCF won't always be positive here because a lot of these penny stocks are going to be aggressively investing in future growth, but it's great when you can see that positive operating cash flow and increasing trend to positive free cash flow and just enough in that end cash position to cover any near-term shortfalls. Sensus Healthcare, ticker SRTS, is up 44% since highlighting it last year, but still relatively small at just $119 million market cap. The company is a medical device maker for non-invasive radiation therapy for certain types of skin cancers. In fact, Sensus is the only company with an FDA-cleared system to treat keloids and has a 97% success rate on the procedure. The revenue here has been up and down, but did rebound 69% in the last year, and this one is strongly profitable at a 29% operating margin, with analysts' forecast for revenue to jump 24% to nearly $50 million in the next year. This next penny stock has been one of our highest returns since talking about it on the channel, but penny stocks haven't been the only winners lately. I doubled my money on 7 stocks last year, with 4 stocks producing 150% plus profits. I'm now adding to that list of triple-digit stocks, and this video in the corner is 7 more stocks to buy for that potential 100% upside, so check that out. I took some profits on Gorilla Technology Group, ticker GRRR, when it's jumped 750% from the 5 months recommending it on the channel, but the recent pullback in the shares has me taking another look at a strong stock in the AI theme. Gorilla is an infrastructure and network defense company built on an AI-based platform for video and data analytics. The company's solutions can be deployed across public and private sectors. For example, data analytics with buildings for secure and efficient use, for police with AI-powered intelligence to improve reaction times and for real-time monitoring, and in healthcare infrastructure and security. Revenue has been volatile, falling in 2021 but nearly tripling last year to a respectable 24% 2-year annualized rate, and a 16% operating margin brings it right to that rule of 40. The company booked its largest order in history last year, and there are a lot of use cases for this platform. As a very small company, there's quite a bit of risk here, but the upside potential could be the best on the list. Click on the video to the right to see those 7 stocks I'm adding to our 2025 portfolio for a potential 100% upside, and let me know which stocks you're buying in the comments. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.